Hey everyone, welcome back to Corporate Decoder, I Specimen Inc. ISPC just filed a 1 for 40 reverse split, and this tells us they are trying to avoid a serious problem. Quick note, this is not financial advice, just my take on public filings for educational purposes. This reverse split is a big deal, and usually signals a company is in trouble and trying to stay listed on the stock exchange. Today we are diving into a Form 8K filed by iSpecimen Inc, or ISPC. This is basically a report for important and sudden events that happen with a company. The main story here is about something called a reverse stock split. Think of it like this: if you have $40 in small bills and you swap them for one $40 bill, you still have the same amount of money but fewer bills. That is what ISPC did with its stock. They took 40 old shares and turned them into one new share. The company filed a new document, the 5th amended and restated certificate of incorporation, on the 29th of April 2026. This document is where they officially made this reverse stock split happen. It went into effect on the 27th of April 2026, and the stock started trading on this new basis the very next day. The key reason for this move, as stated in these filings, is to try and keep their stock price up. Public stock exchanges like the Nasdaq have rules that say a company's stock must trade above a certain price, usually $1 to stay listed. If the stock price drops too low for too long, the company can be kicked off the exchange, which is a really bad sign for investors. So why would a company do this? It is usually because their stock price has fallen significantly. You can see here that before this split, they had over 52 million shares out there. After the split, they are down to about 1.3 million shares. This makes each share represent a much larger piece of the company, and in theory makes the price per share go up automatically. However, it does not actually create any new value. It is more like rearranging the deck chairs on the Titanic. This move is often seen by investors as a sign of desperation. While it can help a company meet the minimum price requirement for a listing, it does not fix the underlying business problems that cause the stock price to fall in the first place. Think about a company like Kodak, which did multiple reverse splits over the years. Sadly, for many small companies that do this, it is just delaying the inevitable. Historically, about half of microcap companies that do reverse splits end up delisted anyway. The company also mentioned that they issued a press release about this on the 24th of April 2026. This is common practice to let investors know about significant corporate actions like this. The goal is usually to try and signal to the market that they are taking steps to improve the stock's appearance, hoping to attract more investors, especially larger ones who might shy away from very low price stocks. Looking at the exhibits, we see the actual documents that make this all official. Exhibit 3.1 is the 5th amended and restated certificate of incorporation, and Exhibit 3.2 is a certificate of validation. The second part is interesting. It seems like the company had done a previous reverse split back in September 2024, but perhaps they did not file all the correct paperwork at that time. So they are now using this filing to officially validate that older split as well, along with the new one. The report is signed by Catherine Field, the Chief Executive Officer, on May 1, 2026. This tells us that the leadership is aware of and responsible for these actions. Now, let's look at the bigger picture for iSpecimen Inc, or ISPC, from what we can see. This is a small company in the healthcare diagnostics and research sector, with a market capitalization of about $4 million and only 7 employees. Recent news headlines show that traders are definitely noticing this reverse split, with the stock popping higher on May 1st and 2nd. Some are calling it a low float runner. This means that with fewer shares outstanding after the split, even a small increase in buying pressure could cause the stock price to jump significantly. However, the fact that they needed to do a 1 for 40 reverse split is a major red flag. It implies the stock price had fallen to pennies. While the recent news is exciting for short-term traders, it does not change the fundamental health of the company. Their top institutional holders have very small stakes, less than 1%. Which suggests a lack of strong long-term institutional support. The risk I am watching is whether this reverse split is just a temporary fix, or if the company can actually turn its business around. Without a solid strategy to grow revenue and become profitable, a reverse stock split rarely leads to sustained success. My biggest concern is that this is a move to avoid delisting rather than a move to create long-term shareholder value. What I am actually looking for is a clear path to profitability and sustainable growth, not just stock price manipulation. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.